Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 27th, 2025. I am Luna.
I am JPMorgan. Because, wow, what a week. U.S. equities, they ended the week at record highs, really across the board.
Quite something.
We saw the S&P 500 up 0.4%. That's its fifth record close. The Dow Jones gained 0.5%. Nasdaq up 0.2%. Another all-time high there.
And the drivers. It seems to be this mix of optimism. Trade talks seem to be part of it, plus really strong tech earnings, especially anything AI related.
Right. And that optimism, it's having knock-on effects.
Definitely. You saw investors kind of rotate out of the usual safe havens. Gold prices, for example, pulled back a bit, about 0.2% to $3,361 an ounce. Bitcoin was hovering around $118,000.
Okay. And WTI crude oil, that traded near $65 a barrel, down about 1.5%. That suggests some worry about global growth, maybe linked back to those trade disputes again.
So if money's moving out of gold, what about bonds? How's that sentiment showing up in Treasury yields?
Good question. Bonds are interesting here. The 10-year U.S. Treasury yield, it's actually down around 4.27%. Yields have been drifting lower because, well, investors are starting to anticipate maybe a Fed pause, or even cuts down the line.
Okay, so the market's betting on a more helpful Fed.
Increasingly, yes. Especially after some of the latest economic data, like that slump in durable goods orders for June, that really seemed to spur some bond buying, pushing yields down.
Yeah, that makes sense. Okay, let's pivot then. Let's talk about those top macro headlines, because there are some big ones moving the needle. Absolutely. First off, there's all this talk about Fed Chair Powell's future. It's created some uncertainty. U.S. Treasury Secretary Scott Bessent came out and said there's no need for Powell to step down early. And Powell himself, he could potentially stay on the Fed board right through until 2028.
And the market reaction to that?
Yeah.
Stability.
Generally, yeah. Markets tend to like continuity. It reduces one source of uncertainty, but any whiff of political interference or even talk of a more dovish successor, that could definitely spark some volatility.
Right. And you mentioned the durable goods data earlier. That really caught people's attention, didn't it? Felt like businesses just stopped spending.
It was pretty stark. An unexpected fall. Core capital goods orders, that's a good proxy for business investment. They fell 0.7% in June. And the overall durable goods number just plummeted, down 9.3%. It's a big drop.
Wow.
It really signals a slowdown. Businesses seem hesitant, probably because of, policy uncertainty, rising costs, that kind of thing. And like we said, this data just feeds back into those bets on the Fed maybe easing up.
Okay, what else on the macro front? Tariffs.
Yes, the big one. The August 1st tariff deadline is looming large. You had the European Commission President, von der Leyen, meeting President Trump in Scotland. There's some, let's say, tentative optimism they might strike a deal. Maybe avoid the threatened 30% tariffs, perhaps settle on something milder like 15%.
Hope springs eternal.
Indeed. And at the same time, South Korea is really scrambling, trying to avoid a new 25% U.S. tariff. There are reports they might be considering a huge, $100 billion U.S. investment package, a major concession.
So the hope of a deal is boosting stocks now.
Exactly, but it's fragile. If these talks fail, you'd expect significant disruption pretty quickly across global markets.
Okay, so quite a bit simmering there. What's directly ahead then? What should we be watching for in the coming days? Sounds critical.
It really is shaping up to be a packed week. First, the Federal Reserve policy meeting. That concludes July 30th. Nobody really expects them to change rates this time. They'll likely hold steady. But Fed Chair Powell's press conference afterwards, the tone he strikes on future policy, that's going to be absolutely crucial. Markets will hang on every word.
And earnings season continues, right? Big tech reporting.
Oh, yeah. Huge week for that. The so-called Magnificent Seven giants, Apple, Microsoft, Amazon, Meta, they're all reporting. Their results, particularly anything they say about AI and cloud growth, will definitely sway the market's direction. They're just so influential.
Can't ignore those. What else on the data front?
We've got some key economic releases, too. On, I believe it's midweek, we get June's PCE inflation index, personal consumption expenditures. That's the Fed's preferred inflation gauge. Then Thursday, the first look, the advance estimate of Q2 GDP. The forecast is around 2.4% annualized growth. And then Friday wraps it up with the July U.S. jobs report. These will all feed into those Fed policy expectations we talked about.
Okay, so summing it all up, the mood feels kind of cautiously optimistic. Writing earnings, hoping for a trade truce.
That seems fair, but, and this is important, there's a question of how much good news is already baked in. Prices are high. which means investors probably need to be ready for surprises and maybe more volatility. The risks are definitely rising with all these major events converging: trade, the Fed, high valuations. It calls for some caution, I think.
Right. So final thought for everyone listening. This late July environment, maybe staying alert to headlines, keeping that portfolio balanced. That seems like the smart play for retail investors. What stands out most to you, though? How might these converging events really shape things in the next few days?
Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.